Hey guys, so I wanted to do a post market analysis of 10th January 2025. So let's begin with the gold and Bitcoin because there's a lot of momentum during Asian market range with gold and Bitcoin. So I'll open the gold chart first. So as you guys can see, this is gold, and I basically look at 1 minute chart and 15 minutes. So I keep switching between time frame, mainly if I am going with the weekly bias. Then I drill down to daily, and 4 hour and 1 hour I use often with 15 minutes. So basically 15 minutes, 1 hour and 4 hours. I start with 4 hours, see the structure. So as you can see, this is the current 11th, but on 10th. So this is the 10th candle. So 3:30 was the first 4 hour candle, and then slowly we start having volume. 7:30, 11:30, and 15:30. So during the day till 11:30, which the candle ends at 15:30, 3:30. No, there was an upswing, uptrend in gold, and then there was a major pullback, which we can check in the lower time frame. But let's drill down to 1 hour. So as we can see from 10:30, market kept swinging up. Then 16:30 we had a major pullback. Then 18:30 we bounced back up. So this was just the analysis part, and I use SMAs and the zigzag indicator, but I don't use it much as pivot. I've seen one thing I've noticed: pivot points give a better clarity. So let's drill down to the 15 minutes, and if you can see in the 15 minutes, this is the structure. So let's go down to the 1 minute time frame. Now if we go down to the 1 minute, as you can see, there's lot of candles. Let's go to the very beginning of the day for 10th. So if you see, the trend was up since gold was in an uptrend. Market swings up and then creates pullbacks. So each pullback, it was like a buying opportunity. Whenever the pivot point showed a buy signal, we simply have to take a buy, because the overall trend is up. The market is gonna keep trending higher. So this is the logic which applies for all the market. But as we're analyzing gold now, just let's look at gold. So 6:30 we had a signal. This was simply a buy. So wherever we get to this level, we simply have to buy and hold. And whenever you get a sell signal, you can sell, or maybe you can hold, because if you know the trend is going higher on like maybe 15 minutes or even 4 hour, best is to check the 4 hour candle, because usually whichever direction the 4 hour is in, the market keeps swinging in the same direction. So we had a buy at 6:48, simply had to hold. The same thing, we had a buy at 8:30, but that was not such a good buy because market kind of came back lower. Around 10:30 was a good time. Another thing you have to check is the times when you trade. Like at certain time of the day the volume is much higher because there's major markets intersecting or opening and closing. Like see 10:30, this was around European market opening and Pacific closes. We had a nice upswing, so we had like a buying opportunity around 6 7 and then 10:30 the market keeps swinging up higher, and then around 12:30 we have a pullback. 1 o'clock there's another opportunity at 1:30. Again 1:30 is a important time too, because this when the London market really begins to pick up steam, and we had multiple pullbacks around because during the London mid session, and then we had a major drop. Then you can see gold started swinging back up during the New York session. Till 9 we had a nice uptrend move. So overall, if you'd taken the trade by the let's say the daytime, just let's take the trade in maybe one direction. Let's go to the 15 minutes. So in the daytime, if you had traded gold, basically let's say the 7:15 there was a buy, right? Simply held. That would be nearly 120 points, 120 points on an average by simply holding the trade. And if we wanna split it, I think basically we had one opportunity which was 50 points on an average, let's say, and then 10:30 another 70 points, and then 1:30 another 80 points. So it is basically like 70-40 and 50 points, close to 160-170 points. Let's assume as 150, but even if you held, it was 120 pips more. So this is the logic. And then we had a drop. This was a significant drop which we could have capitalized because there was 3 rejection points. Usually 2 to 3 rejection points are very strong indicators that the market is gonna drop, have a bigger drop. So I think it showed here. So if it taken around 7, around 14:30, right? Sorry, 14:30, not 14, 16:30, there's usually a move. So this was that swing down, and we had a huge drop of up to 200 pips. So this is 4th opportunity in the market which we could have capitalized, and then quickly after the news the markets start swinging back up, probably because of there was some news which was showing bad signs for the market. That's why gold went up. So there's like a correlation between inverse correlation or negative correlation between gold and the stocks and Bitcoin is kind of strongly linked to Nasdaq, and Bitcoin, Nasdaq, Dow Jones, they all are they usually move in one direction, while gold is you know not correlated with these assets. So we had like a 180 pip downward move. That was very good. I mean, we could have capitalized. Then directly we had another upswing, which was 330 points. So as you can see, if you really calculate, we closely had 170 pips move, then another 180 and a 330. So gold has moved more than 500 points on an average, close to 700-800 points. And then we had more majors, like smaller moves after 11, that we don't have to capitalize. And you can capitalize if you want, but I don't recommend it. The volume was dying out. Huh? Okay. So this was the gold analysis. I mean, just a 15 minutes chart. The zigzag indicator really works well on higher time frames. It shows certain levels, I guess. See this higher high. This market's been swinging in one direction. But pivots are the best, and I use SMAs at times. Okay, I guess let's continue with the Bitcoin chart now. I'll close this recording.